Great and good evening, everyone from Nigeria. How you all doing? Happy weekend. Hope the week is being great and the month have been great thus far. Trading Stacy Box concept. Just a minute. Lord. Great then. I'm not gonna be waiting for anyone. I'll just go straight into it. I see that so many are struggling trying to put the piece together is really something that whenever I go through some channels and I see how people are slanging on the fence on a very simple concept like this, I feel like, oh, there's something I could do about it. I try my best to see if I can call for meetings and do the best I can to show a little bit of what I know, though. And to God be the glory. To my own ability, I've tried my best to help to show many the concept. Not like I'm the best out there, no, but I understand the concept to an extent, and I know if you put in the work, you'll be able to get to where you really need to be. The major reason why many struggle is simple, is the fact that they don't really have a clue about what they are doing. They just go approaching the market with the aspect of, I am a forex trader. And as such, you go into the market and all your mindset is calling is nothing but money, money, money. And whenever you think like that, you'll be in a whole lot of trouble. Why do I say that? Is because you are going in without information, and those are the kind of people the market makers like taking advantage of. Because the truth is this: come next year, come 50 years from now, market makers will keep on doing the same thing. So the point about it is, how do we stay out of their manipulation and trade right? First thing I would say is this: as a trader, you have to first of all know what you are doing. And once you know what you are doing and what you are looking for, you find out that you are not meant to be trading every day, not because you just decide to say no, you don't want to trade every day. It's because you're waiting for some parameters to be met before you take your trade. So today what I'll be doing, I'll be just going straight into the strategy, showing us how this even new week we are coming, we can, if you've been watching Stacy or you have been trading, you have an idea of already what he's saying. So this is just going to help you to maybe put the piece together. You'll be amazed at how simple, as Stacy will say, this is. If you really understand it, you know what it is, you will struggle. And one other mess I see is that retail traders, they can't just stop. They can't. I don't know why. They can't just stop counter trending. And that is where the danger is. They just want to like be, I don't want to be the first to take a reversal. No, I don't want to be the first to take a reversal. I really want to have a clue. Let the market give me some information before I can say, okay, good, this is good for a reversal. So what I would do is I will go through, okay, any instrument, but we are taking this one to really look through the process, which is AUD, USD, any instrument, the same thing over and again. Market will do the same thing. So beautiful. Let me say this before I go. Once you're done with this and you feel like, oh, you want more, you really want more, you want to see how maybe I trade or be, you want to go through a process, mentorship process, you want to be built, then my mentorship is still open. Is what, $100? Nothing is making it go high. The price is the same, but I guarantee whatever you're coming to get when you decide to come for the mentorship, my some of my students I believe are here. 100% guarantee your money will never equate the information you're getting. And by the time you start making returns, You say, wow, glory be to God. So what I will tell you is this: if you want to pick up the mentorship, I'm available. I only accept crypto. But for now, please, let's keep that aside. Let's put our mind on what we are here for. Let's look at the process. Okay, let's get to our chat. Let's start from even this place. I'm seeing. Okay, from here. I don't want to say so much, but what I will tell you first is remember this and never forget. It is first a mind game before the money. I want to say this. You come into the market and you see market moving this way. All this movement is creating, if you don't know what you are doing, creating fear and greed. Fear and greed is what moves the market. When you come into the market, for example, you see the market running high, your mindset is like, I'm going to buy, it's just buying. And then you take your trade and you lose. You say, but I thought it's buying. No, market makers operate in a model that if you understand it, you will not be caught in their manipulation. Instead of you be scared, rather you go with an information into the market and you follow the information squarely. Okay, the market is meant to, sorry, you're looking at your information and you are looking at the market. Is it confirming to what you are actually looking for? If not, then there is no trade. Don't come and start gambling. No, it's not a gambling game. No, the market makers are deliberate. They know what they are doing. You too, you have to be deliberate. Now let's get straight into it. Now, like I said, if you are not used to Stacy Box concept, I will beg you, go back to YouTube. You say you have so many videos on YouTube that can help you get started. But if you are used to the concept and you are struggling, then this is for you. Let's go straight into it. So you see now, let's come into this week. What happened is the previous week on Friday. Let's take it slowly. If there be any question you ask me. On Friday close as inside day. Now after inside day, normally I do not look at that. Sorry, the instrument comes onto my watch list, but I do not look at any behavior of price inside until the up until the previous day's high and low or low was is triggered, then it brings me into looking at the market. In this case, price closed as an inside day. And what happened? The number one setup I normally look for when I see an inside day is a failed breakout. And in this case, we have the Asia period when the market opened, it dumped and broke the previous day's low, which is the inside day's low. And what did market do after it broke the low? It came back inside. And one thing I could see from my left, it created a box, a pattern within a pattern. Remember, the previous day's high and low is important. That is why we have the lines up here is a box. So we are always working in a box. And inside that box, we are having another box. You see it. Price gave us a failed breakout from Asia and then pumped into London. London section dumped into the low it created, and then it started going high. From what time? 4 o'clock. Started going high. What we have just watched. It now gave us front side. Why? To the upside. Bulls are in the market. Buyers are in. Why do I say that? Look at it here. All through the week, market, sorry, let me come back to Monday. Let's just work on that. We'll still continue. You see the same thing over and again. So now we are coming into Monday. We see that Monday closed in breakout. Monday closed in breakout, introducing buyers into the market. What literally do we usually look for on Tuesday? Tuesday is day two. Monday is day one. We most of the time look for a range extension in day two, Tuesday, day two. So what I have now is market closing in breakout. It has brought this instrument into my watch list. Now listen, if they took the low of the inside day and they took the high of the inside day and then closed in breakout, that inside day became my range. The inside day became my range. This is my box. So what I'm literally looking for, price has given us indication for range extension. Do not counter trend it. If market is going into a range extension, you go counter trending it, your account will be blown because it could be very aggressive. So what we have now is, since it closed in breakout and momentum is bullish, all we have, our setup for the day is what? Dump and then pump. And what happened? It closed in breakout and then it gave us again another full range extension. Minimum at which I am looking for when I'm still looking for the range extension is minimum one full range extension. But in this case, look at what market did. It gave us three, just look to the left, it gave us three full range extension of the day zeros box. Please, did you get it? This is now three level of rise. But how do we take trade this second day? It is showing and giving us signal for range extension. It triggers the high of the previous day, dumped back into the level at which it broke out from Monday, and then continued in the direction of the breakout. Market will only do three things. It will break out and fail. It will break out and continue in the direction of the breakout. And that is what we have in day two. And now day three, what happened Wednesday? Market open, sorry, when it got to the high, market closing, it dumped back into Asia, coiled, and then pump into three level of rise. I am not yet taking my trade. I want to get information that makes things very clear and easy so that by the time I go in, I'm literally going in where it is almost impossible for me to lose. So you see now it has gone high in three in in three level of rise. Now look at, I'm not showing you guys the number box now, but look at what I'm showing you again. This will help you to make informed decision. Note, buyers are in the market. They are the ones driving the move. This can easily keep on going on more extension. But what happened? I'm not looking at trade buying high. So at this point, what happened? Market sets up. This is not catching the eye. If this could be catching the eye, but what happened the next time price came back to that level? How did it behave? So this is nail and bill. Why nail and bill? Because the trend is still up. Buyers are still in the market. They are creating series of higher highs and higher lows. Trigger the high again, higher high and higher lows. So at no point the low have been triggered. Because the low have not been triggered, I am going to take it short and sizing or whatever, not nail and bill. I might be 50-50. I don't want that. So nail and bill, because I'm not expecting a full range, because I'm going against the momentum. This is not first red day, but it gave us what? Peak formation high. Hope we're understanding. Peak formation high. If there be any question, you can ask me. You can stop me at any time, interject and ask. I'll be able to attend to your question. So see what happened. It gave me peak formation. I came into Asia. Once the next day opened, this is not a signal day yet, because it didn't close as first red day. Bulls are obviously still in the market. Before I could even say price have gotten into the bearish momentum and I'm looking for sell, I want the opposite end to be mitigated, and that is where it is. You see what happened? Price went from this day. Once it closed in breakout, the low was not mitigated. Rather, price ran up. And then what happened? It came and it pinned the low. This is a dead giveaway. Is a pin that price most likely, if it fails going high, is going to definitely come back for the money. 90% of the time, market will do that because it's a pin to the low. It pinned the low and it started going high. And guess what? It also gave us a pin to the high. Look at it here. That is now my new box, high and low. So what happened if price fails going high? I know that most definitely they will most likely come back to this level. And what happened? Price went and started trading inside, went back into the eye of the box, and then showed his hand to us. Momentum being introduced to the market. That is where most people get it wrong. When there is no momentum and you are coming in, you might be fighting the trend. So what happened? It gave us lower low, pump back to the high, and then dump, giving us, if I'm not making a mistake, one full range extension, at least minimum. Once the box have been established, from the eye of the box to this level is two full range extension. How do I know the range extension? Price is always in a box. Did you get it? And let me show you something. Since price have already broken the it has gone high in three pushes. That is three level of rise. What do I see? Price starts dumping and then it gave us what? First red day. First red day. The question you should be asking is, where is price headed? So you see it now. We have three level of rise. Definitely, most definitely, we are coming back to the low. So what happened is this. Walk with me. So what happened is, sorry, what happened is price now in Asia started pumping high. Market and price is always in a box. It triggered the high. Sorry, I'm recording this section, but please, an apology. The recording will only be accessed by my private group. That is the mentorship group. But for you that is not in English, you can take notes and use it for yourself this coming week. Trust me, there's nothing to this. You're going to be fine. So now let's go on. So you see, it pumped into Asia. Asia got the trade, if I'm not making a mistake, started coming down first red day. Where do you think they are going? Now look at this same behavior. What did I
Can't hear you.
tell us just now? Once there is a pin, click could fail. Sorry, I'm not hearing myself. Data. Yolanda, can you hear me?
I can hear you now.
Oh, beautiful then. Sorry, my network got jammed. Okay,
Yeah,
let's go on.
we lost it for a second there.
Okay, sorry, I too I got lost. So not to worry, let's go. Let me make my screen a little bit bigger because I'm not just
I think
going
we
to.
lost you at where you were talking about the Asia high.
Okay. So you see, price pump and then it's coiling up high right here. Everybody up there is trapped. Everybody up here got trapped. Peak formation. Okay, so you see, we are literally now, we are in front side pumping high. Now we are now in backside. Remember, some weeks could be trending, and therefore maybe front side and backside could still be in just one big trend, just like what happened this week in indices. So I will show you that before we round up today. But let's just get straight to it. 1, 2, 3. They've taken price high. Why 1, 2, 3? This box is, look at it again. The inside day is a range. Now listen, as a day trader, let me make this clear to you so that you guys will stop all the gambling and thinking you don't know anything. No, you do. But it's just that we are day traders. We are not waiting for the best trade setup. I want to say that the best trade setup will usually come out of a narrow ranging day. So once you see a narrow ranging day, note that a bigger move is about to be present. Like, for example, you have a breakout inside the next day you have an explosion. So you have that understanding. That what I just shared with you now is a setup that if you want, you might get it every blessed week. Breakout inside the expect an explosion. I will show you it happened this week. So let's go on. So what I'm saying is this: whenever there's a narrow ranging day, market will usually go for an explosion. Invariably, once you see a creeper, know that they are trapping buyers or sellers going in the direction of the creep. Then after the creep, they are going to knock them all out. It's usually happening. So let me quickly show you that before we go on. If you look at this very day, market is coming down, is creeping down. This creep shows that buyers sellers are being trapped. When it came down this way, what happened? An explosion. It gave us a creep, but this creep now, because you know that, what is the name, you know, the three level of rise, they are going for the completion. Don't go against the range extension, most especially on day 2. It might blow your account. So this is a parabolic channel. How is the channel? It is an ascending channel. What happened? Price is in the channel, then exploded in the direction of the trend. So now let's go on. So you see, now we come to Asia. Once we know that price have already given us 3 level of rise, I'm not just coming into the day and saying, oh, Asia, I'm selling. No, I don't even trade Asia. But what happened? It dumped heavily. New York, sorry, London traders might come in and say, oh, they want to buy, but they have forgotten that all they are buying into is they are buying into a pressure coming from who? The sellers. Sellers are taking the market back. So they might come to this level and say, oh, why did the market go against me? You are going against the trend. You got it. So see it now. We have 3 level of rise. And what happened? Price started coming down, but what happened? It pumped back high and then continued in the direction of the trend of the breakout. And now price started pumping, giving us again a box. That is a level. Sorry, look at it, the pin. Just draw the pin and see how price reacts when it gets there. That becomes my eye coming into the New York section. This is low hanging fruit. But why is there still space? Just look left. There is still space. So what I have now is price pumped, took buyers to make them feel they're now in the right position. The market is turning around. But the mistake they're having is that now we are triggering the lows. Buyers are not inside. The eyes are being protected. Go in line with that direction. So what happened? Look at it here. Now what happened? Price pumped and broke out of this level. Look at the bar. It broke up. But before we take our trade around 10:30, there about where the trade happened, what happened? Momentum was introduced. The momentum is when you have a breakout bar negating the move. That shows that volume is being introduced. Sellers are coming back into the market. I usually wait for a pullback, then I scale low to find an entry. With that alone, try it this week. You find out that 90% of your trade will be a winner. Always know where the momentum is. Let the momentum be tilted to your direction. before you start placing trades. Otherwise, you'll be taking a trade where you are fighting the trend. Because if you look at this, going high, the trend is bulls. Buyers are coming in, but now sellers came into the market and then dropped the market. How many range from this box? I am looking for at least one full range extension just like this. But once the range is small, I look for two full range extension and see what happened. You entered and a blast. Now look at it this way. This is a full week. Let's say on Monday you got nothing. On Tuesday maybe you got this trade because you know it's going on a range extension. Great one. Wednesday maybe you didn't take anything. But look at lo and behold, easy trade, easy trade, 3 trades. This could be enough for the whole week. You don't have to trade every day. Trade where it is almost impossible for you to lose. Trade less, but with a whole lot of size. Over time, when you keep doing this, you can start adding size. Let's go on. I'm looking at this instrument. So let's keep it on to the end of last week so that you guys can really see how to really navigate the path when you are trading. So you see now, Friday close in breakout. Look at it closely. Let me make it a little bit wider. So you see, I've expanded my chart. So you see what happened. Price started closing breakout. And what do we have? We have higher high coming into our section. What do we have? I'm not saying you should take this. Is your choice, but it has showed his hand that buyers are coming into the market, but at that they have not triggered any level yet. But what we have here easily, once it closed, we have false green day. This is where most of you will make big mistake, but I'll be able to correct something here today. So sorry, I'm not myself today. I don't know. I took something and I'm reacting to it. I had something I'm not really feeling too well. So please bear with me. So now let's go on. This is false green day. False green day stroke. What do we call it again? What am I doing? False green day. Oh, Jesus, my head. Was ready? First green day stroke, what they call it, inside day. It traded inside. Why? Because it did not trigger any level. It didn't trigger any level. So it's inside day. Truly, what I'll tell you, on Monday, I love looking for where trade the market has come to mitigate any level. But whichever way, this, if you want, is still a trade. That is a box. We are going for what? Smaller range. What do I tell you? You go for two full range extension. But this gave us three. But that's by the way. So what do we have now? Remember, coming from the first red day, we have what? Breakout. What happened again? We have breakout. This not yet failed is still outside, so we are still trading in that level. The next day, bulls are coming into the market. False green day mitigated the level and then walked the low and then close again in breakout. Most of you will come to the market and say, oh, that is first green day. All I'm going to be doing, they have mitigated the high. They are meant to be buying. I'm only going to buy. But guess what happened? They turned around and you scream and say, why did that happen? Once market is in its trend, in its element, what does it do? It does this impulse correction, impulse correction, impulse correction. If it's going as a bullish trend, it will definitely correct. If it's going as a bearish trend, listen, it will also correct. Impulse correction, impulse correction. Don't forget that. Let's go back to it. Sorry, any question? Hope you guys are gaining understanding. Hope you guys are understanding what I'm sharing. Let's go on. So you see, first red day, obviously, sellers are most likely still in the market. Why did I put my line there? That is where sellers really came into the market. So sellers' momentum have not been taken out. This is sellers zone. They're definitely up there. Sellers are still in the market. So what happened? We came to where sellers were introducing to the market, as in first red days box. That is what it is. That's where sellers came into the market. Price pumped back to that level. And lo and behold, how did it get there? It pumped, then broke out, came back, momentum came into the market. And what happened after momentum? We got a runner going back down. What do we have now? Let's make it clear. We have dump. Sorry, I'm coming. We have dump, pump, and we are dumping the market back down. This is first green day. It has given you a trade, right? This is only, that is why I say most people get trapped. You say first green, the market is meant to be going high. But the thing is this, you have forgotten that we have sellers to the left previous week, Monday and Tuesday, only took price back to that level. And then what do we have? We have price pumping to that level and then broke that level. What do we have? I want to measure this range and see if we can, because it's a bigger range, if we will get 2 or probably 3 full range extension. Invariably, this is also a box. I'm going to explain all this, but let's stay here first. So you see what happened? Dump, giving us lower low, impulse, correction. Are you getting it? Impulse, correction. So what happened now? Let's read price slowly, day by day. Day 1, day 2, day 3 reversal. And what happened? Price came back. This is no coincidence. Price came back to where bulls came into the market on Monday, where they came into the market, came back to work that level, and then gave you a quick trade. That means they got the money from the buyers that came in on Monday. If this is not your trade, stay out. But what happened? It showed you its hand, then bought and closed back inside. Then the next day happened to be inside day, which is Friday. That was how the week closed. Let's go back again so that we see what I'm saying. What am I saying in essence? We have, look at what I want to draw. All I have here is impulse, correction, and we're going again. All these are inside this high and the low. So we are still not taking any high after it failed here. That means sellers are still in the market. Did you see it? 1 push, 2 pushes, it came back inside. I'm going somewhere. It came back inside and then gave us the 3rd push, giving us 3 level of drop. Did you see it again? How market makers could get you confused and guessing and say, oh, this is where market is going, that is where market is going. No, be flexible. See what they are telling first before you take the trade. So let's go on. Sorry, we'll look at that. So this is first red days range, the first range. If you want to take the box, let's see if that gave us 3 full, how many range extension of this box. If it's not making sense, you guys should ask question. It gave us 1, 2, 3, continued 4, close to 5 full range extension of that box. But whichever way, see the box, like I said, it gave you peak formation low. Look at the peak formation here, peak formation low, and then it gave you what? Peak formation high. You got it right. Then what happened? It pumped back inside. If that is not your trade, you would have taken this. But you see what happened? They came back to get the money. sets up, gave you a smaller box, and gave us a 2 full range extension, coil, lower low, pump back to that level. What level is that? That level happens to be the breakout point from previous week. When he got back there, started dumping, but this is inside. This didn't even give you a signal. So what happened? The next day, price, which is Monday, took the low. Just look left. You see that it came back. I told you that once they set up a pin, most of the time, market makers will come back to that level. Look at this pin. Can you guys see the pin? It came back to that level. It was a low, but now it broke the low, telling us that money could still be down. Went I 10 o'clock club, got the trade. Now price continued and broke out of the box, came back to retest the box, and then it went to the low of the box. What do we have here now? 2 full range extension. Did you get it? So with this, you know where is the money, who is in control, momentum. If you look at this, let me wipe out my chart so that you guys can see clearly. Let me show you from here. Once the low is mitigated here, this is lower low. There is money down here. And if you look to the left, just look to the left, try and look to the left. See what you have, pin. This is similar to what happened to West Texas Oil this week. Market will keep on repeating itself. So see what happened? It took the money and ran into you. 10 o'clock club, got the trade. And what happened the next day? We are trading as inside day. Tuesday, Wednesday, inside day. Thursday, right? Thursday gave us a trigger the lower gain. And we know that who is in the money? Who is driving the trade? Sellers. All the eyes are not being mitigated. Pump, and then around London section, we got the dump. And then once they got to the low with the full range extension of this inside box, this very high and this high, low and high, this box, once they got to that level, what happened? Let's look at it. Forget about the days now. I'm just trying to show you guys the big picture. What happened? Look at what happened. Price came to that level. 1, 2, 3, walking the low. And then what? Exploded. Remember, the first green day we saw here was a trap. Why? Because you see what price is doing. After this, it was the highest point it traded. So it gave us one push down, went high, came back down again until it mitigates the low. 2, and then 3 full range extension. 1, 2, 3. Elliott wave. Look at it again. This you must know before you can start saying today is first red day, yesterday is first green day. Oh, why is the market going against me? Because you don't understand this. You see, it has given us 3 push pattern to the low. Once it gets there, what happened? Price is walking the low, giving us what? Short squeeze. Everybody trying to sell at this point is dead. And where are we? We are at the low of the pattern. 1, 2, 3. That is where you most likely will see a reversal. So when that happened, it closed in breakout. Clearly, this is where you can say, I have my first green day. And you can hit your chest and say, this is first green day. Whatever anybody does, I don't care. Because you follow the pattern. First green day. Market is failing. And now first green day is showing you some trend. This is what you call first green day. Not when it's trading inside. Where is it? Where's the one I showed you guys? Said not when it's trading inside. Look at the wind. Look at the wind. Just go a little bit backward and get the high and the low. You see high and low. Box market is always in a box. So it's still trading inside, it's coming back down and it's still inside, and you are calling this false green day. It's best I call this false green day, but not when it is inside the box. So now let's go on. So you see now when price now got to this low, when it got to this low, this became my false green day. False green day. What am I looking for? If it presents an opportunity to buy low, if it presents, and lo and behold, market dump after the breakout is giving us range extension. It came back to this low and extended the range. This is my range from the low to the high. That is my range. And then I told you that once you see a pin, the big picture first, before you start thinking about entry. Once you see the pin, draw the line. Ask yourself, where is momentum? Where is volume? Before you take the trade. It's still closed in breakout. It's still closing breakout. And then what happened? Price pumped, gave us a box in Asia and gave us a trade. Where is the trade? Minimum at least one full range extension of this box. If it gives you two, good. It gave us two full range extension. Let me wipe this one out and go back straight to it. So be careful. You already know that bulls are in the market. And once bulls are in the market, what did I tell you? This is the first push showing us bulls are in the market. This is an impulsive leg until the low is taken. So therefore, what happened? Price only broke out. What do I call it? Correction, going back to where we have our first green day, relating it back to what we have when we had our first red day. Price came back to that level without taking it. What is it that we have in here? Flip the coin. And you see what happened? It closed in breakout. Buy, buyers are forcing themselves into the move. But no, this is the trade going back high. Why? Bulls are now in the market. So I want to take one full, because this you see from the low to the high is just one leg. That is one full range extension. So I'm taking my range from the high to the low of that box and then extend it to the future. And minimum, I'm looking at one full range extension, or probably if it goes extended range, we are looking at two full range extension, which will give us three level of rise. Now let's work. So see what happened? When price came back to this level, you got a trade. What day is this? On Thursday, reversal, breakout, dump, and then pump. Friday close as inside day. Monday trigger the high. Now the question you will ask is this: even though Monday gave you a trade to sell, is this the trend? Obviously, you know it's not the trend. So this is nail and bail. So when we are in the trend, you find out that we will be going on a longer and a bigger range. Why? Because it's expanding the range, giving us impulse. Impulse. Look at the impulse here. You see the impulse and see the correction. The question is, which one is longer? You can see that when you are in the impulsive leg, it goes for long. It goes for a larger range. So you see now, so it gave you higher high. Once you see the pin, I said they will come back to the money. The pin. That is money in itself. Look at this, the pin. There was a pin. Price came back to the money. There is pin again. Asia trader came back to the money. Now price started going high. All these that I'm showing you is going to help you to stop taking the 50-50 trades. What you'll be taking trade based on information. So you see, now impulse, what do you see? Look at this leg. Why did it go that way? Because now we're in impulse. Impulsive leg is going on a runner. So if at all you want to counter trend this, you know that is called nail and bill, the pin, nail and bill. You see, nail and bill. And what happened? It closed in breakout. And after I close in breakout, without doubt, I'm being scared. With that information already being established, that you know the impulse and correction leg, and you know that the impulse we are most likely thinking of buying, and it shows you can go with confidence and take a whole lot of size, so that you are in line with the momentum. Great then, and see, lo and behold, what happened? Price went in. I took this trade, so I know this very well. One, level of rise, that box, I'm just measuring the box. Two, level of rise, and then three, level of rise. And that was where it started turning around. Did you see what they did? They took price, three, level of rise. And that was about where I load in the boat. Understand it. Once it is going high, it's still in the momentum. I'm not saying you cannot sell. Don't get me wrong. It might create an opportunity for you to sell. But for me, I see the sell as nail and bill, because I don't want to fight the momentum. So you see, this went high. If you see the correction, you see how short it is. Correction, and then we have impulse. Just like what we have coming down. Impulse, correction, impulse, correction, impulse. And now we have impulse, correction, broke that level, impulse, correction, impulse. As it's going high, and you have the clarity of what you're looking for. Monday is day one. Did it give us something of importance? This is a pin I could see. Price ran back to the low, giving me a box. It came back to the low, the pin, and then started acting up. I want to see momentum, volume. I'm going for minimum, since it's a big range. Minimum one full range extension. You could have closed there, or just hold and see how price reacts. Now the next day, close again in breakout. What do I want to see? I want to see where low have been created. Is volume being introduced into the market? Day two typically goes for range extension. Do not fight it. What happened? Like I told you, the fact that market is in a buy program doesn't mean that you won't get nail and bill. Asia Trader got the pullback. Then London section got the continuation. You could see how expanding the range is, because you are in line with the impulsive leg. You're still buying day two. Day three became day one, continued in the direction of the trend. Market is trending. Do not counter trend it. So what happened? Definitely, this gave us a trade. You say, oh, this is first red day, because we are at the high. If you look back, you see that it got to the highest point at which price have traded for that day. But the only thing is this: if you compare this first red day and this very one, you see when this one became very solid. Why? Because the opposite end got mitigated at the eye. So we know that market is most definitely turning around. That is when you are able to take that trade. But in this case, Stacy said he will not be the first to get into a move. So you coming into this, You know that this is nail and bill. Take your trade. Where is the pin? Let them get to that level. Get the money and get out. You see, you want to say that is first ready and you are selling here. You are in trouble. What happened? Market went and gave us a three full range expansion, three level of rise, pumped to that level, ran away to that level. It gave us every information that it was going to go higher high on the inside, dumped to that level, and then blasted when volume came in, blasted to that level. What happened? Now it's coiling. Don't take your trade. Though there's a way at which I look for the volume going to lower time frame to really find it, because I want to be sure that sellers are in. But for this section, I won't be able to do that. But what I want to show you is the big picture concept so that you know when to take trade, so that you are not taking the 50-50 trades. Like, for example, indices this week, if I'm not making a mistake, it was only US 30 I took a trade on, and that because it was very clean. There was reason why, but I know that even at that, that was nail and bill. Twice I took trade on it. Why? Price is pumping high. The same kind of concept. You could see my box. Before the trade, the box is already there because I know what I'm looking for. The first range, the box, 1, 2, 3. We're in the third level of rise. Maybe to get high, maybe turn around. I don't know. But I'm not going against the trend. But what happened? Look at what happened. For those of you that already have this information, you know this could be a trade, but I didn't take it. I don't like catching high. But what happened? This runner, I knew that this was a trade. I took this very trade. Why? Nail and bill. Why is it I didn't go all the way? Some came and said on Nasdaq, let me show you. Sorry, this was a trend. Now see, if you look at this, this is a box. The high, the low of this box. So all we are trading. Hey, sorry, who is that, please? This is Thursday. So we have a high before the section on Thursday. I didn't take this trade, but I bet I'm going to this. Sorry, who is it?
Who?
Hello, who is that, please?
I think it's Benjamin. He left his mic on. Thank you.
Okay, self-focus. Okay. So look at it. You should, Stacy. When I was studying with Stacy and his playbook and all his ACB and all that, and even on YouTube, I'm always like, I don't want to go against the trend. I don't want to be the first to take a reversal. I don't have any point to prove to anyone. You don't, I don't. So you wait. Now this, yes, is trap and shift. Yeah, you got your trade. But look at how did the market, what is happening? Understanding what they call Elliott wave. It goes in three pushes. Sometimes it could be more, but we have the box. Price is trading inside the box. It went high again. Went high again. It was working in the box. It pumped down, still in the box. Now it broke on high. We're in third level. We don't know what will happen yet. If it will keep on going till it gets to the range. Why the range? The consolidation box from the low. So you see, let me show you this. So this could have been a perfect trade for you. But you know that this is not an all-in trade like ACBY, because we are still in front side and the range, we are expanding the range. And immediately price took that level, we entered a new range and exploded. Don't try to counter trend the market when it's going on an extension. This is where most people blow their account. Don't catch the high. Don't be like that. See Nasdaq too. Nasdaq too for the whole week. What happened? Look at what happened. Strongly trending high, going high. Three level of rise. is not showing a hand, it's not giving me a clue of where to take a trade. Maybe you are an expert. Awesome, great. Continue trading that way. But I will tell you, it's the surest and fastest way of you blowing your account once you don't understand this. I called for this because I want you guys to really understand and see the model, the dynamics. How does the market really operate? They have a way of trying to fool you, mess with your mindset first before they deliver price. If you don't know what you are doing, stay out. No doubt, look at this, everybody. This is a pin. You know there is money there. 90% of the time, they're going to come back for this. So what happened? Price trapped everybody and then deliver. Why did it go that aggressive? 3 day setup. Day one, day two. What happened? It broke out. Let me make it clear to you guys. It broke out of this level, all this range is still up high. Let me wipe my chart. I want to show you this so that I can understand it clearly. Let's go to day chart to make it fast. Okay, see what happened here. Price, look at the pins and look at the left again. Clue, there is money on in all that level. So you know that there's money, but look at it closely. What happened? Price gave you, say, oh, 3 days of lower closes, but you have forgotten that there is space. So they gave a pump day. What do we have? Let me show you. What we simply have is the impulse correction. And this is lower than that. Impulse again, correction, impulse. Did you see it? That is what we're having. So what happened now? Price, first of all, Monday, how did it happen? Look at this. At one point, it was pumping high, but price came back inside and dumped down. Momentum is strongly bearish. What do you want to see? Stacy will say in this situation, he wants to see a pump day. What happened? That is the pump day. And lo and behold, it gave us a good trade after the pump day. What we have is lower low, pump, and then dump. Now let's go quickly to 13 minutes. I'll round up here. I just want to show, because I'm having another section with my students, I want to show them how to take trades in terms of entries and all that. Sorry about that, you guys, but this is going to help you a whole lot. I bet so. So you see now, price gave us a box. I just want to show us quickly. Price gave us a box before our section. When you see momentum, you know what's happening. It blasted, gave us one full range extension. That's a good trade. The next day, lo and behold, in New York section, the same thing happened, gave us a good trade. Good trade close in breakout. This is just noise. I don't want to trade this. But if you want to trade this, how would I have taken this? Where is the momentum? They're pushing price up high. When momentum came into the market, I was interested. You can take your trade. I didn't take this trade, but let it be easy, dummy proof, like Stacy would say. Get it? Closing breakout. Started pumping high. Someone took this trade and said, "Oh, that is false green day." But the matter of fact, I said, "Oh, see, I also wrote it that this is false green day." But when I went back, you can't just be in 30 minutes and conclude. If you want to be in 30 minutes and say, "Oh, that is what you want," at least zoom out a little bit to see where the money is. Zooming out, you know that this is where the pump started. And pump went up high in 3 level of rise. It went high, 3 level of rise. And what happened? Started dumping. It's giving us 3 level of dump. Look at 1, 2, and then the third one. And then you are already counter trending. You'll be in trouble. You see it. So you take this trade again, this very one. So if you're trading only this instrument for the week, it can be any instrument. You would have taken 1 trade, 2 trades, and 3 trades. This is how it should be. Things will be easy for you. Just these 3 trades would have more than triple your account. You don't want to trade suboptimal trade setup. Then what I've shared with you today, go and master it. Go back in time, look through your chart, go to Stacy's video. You see that invariably he's just saying the same thing.